Yeah, I'll start with the high level, right? What a burr is and what we were doing. It's essentially you can do it with a lot. It's a value add. It's a value add play. So you can also do a multifamily, which we have some, right? But you essentially buy a piece of real estate that needs work, needs value add. It's dilapidated. It's run down, whatever it needs, and you renovate it, right? So you buy it, then you renovate it, and so we started a construction company. We do everything we do is in-house. So we can get to kind of how we've scaled up that side of it too. But we knew we needed to control every piece of the puzzle in order to do it fast. So you renovate it, and then when you're done renovating it, you rent it, right? So you bring in the income on the top level, and then you go to the banks afterwards and refinance, right? So you get short-term hard money loans, private money loans. You know really well about all of that world, right? You know what I mean? And then you go to the banks or long-term institutional capital on what I call stabilized debt on the back end. And that's kind of your burr process. And if you do it well, you can continue to repeat it because you don't need a lot of your own money at the end of the day. If you burn it right, because you can add value along the way. If you buy it under market value, you renovate it, right? A lot of times if you put 30 grand into it or 50 grand into it, you're adding more value to the home than what you're spending on it if you do it right. And so you can create essentially value add equity in the deal, which you can then pull out from the bank afterwards. And ideally, you're not leaving any of your own capital into the property once you've done and stabilized it and rented it on that back end and refinance it. So that's kind of high level, what I would explain to me as burr at that level. For us, how we ultimately did it, like I'll tell you, man, it's a couple things. Of course, it's scaling people early and often, so overpaying for really good talent early on, knowing it's just a value proposition, right? If they're really good, it's a cost line item and it's scary, but the value that they're going to bring to the business is above and beyond that. And so you kind of have some, part of my French, have some balls, right, to be able to make some hires and invest early. And I've always looked at it that way. To me, what I knew was key was essentially on the back end of everything. If you can stabilize that back end and focus on what we were good at. My partner was good at finding the real estate, and I was really good at the number side, getting the financing in place, talking to our private lenders, managing the math behind it all, the books and records of everything from that perspective. So I said, if we can find somebody really good to kind of oyster or really pin down our property management once it's stabilized, that we can basically forget about it, then we can be off to the races. And so that's what I did. And you probably met TJ Bedshow, who's a board director in the boardroom now as well. He's been with me for 4 years. He successfully ran and scaled a property management company. Well, I brought him on full time as my third employee. And we could not afford him by any means at the time, but we said, we're going to figure this out and we're going to way overpay because we know the value, right? If we can go do what we do well, then that's the real value that we can create. And so that's what we did. My partner was really good at finding the real estate for us, off market for the most part. And then really the key to our success was the ability to really understand a financial statement, the cost of capital, and understanding where every dollar was going, and speed, right? And so our goal was always 120 days. Still is. I think right now we're averaging like 124 days from the moment we buy the property to the moment we get it on long-term stabilized debt. The short-term debt's hard. It's more expensive. Every day matters. I'm always tracking. I'm big on the KPI side, so I'm always tracking exactly what things are costing us. I'm sure you see it. I see it all too much. People are worried about, windows. We're going to save $300 on a window that's not going to get delivered for a month. I'm like, well, what are you paying per day on your borrowed debt on the short-term debt? And they're like, I'm at 12, 13%. I'm like, well, do the math. Pay the $200 extra, you get the window in today and get that thing refinanced, get your tenant in there, right? And so really just being able to evaluate the cost of capital. And then the other big piece that I would tell you that really allowed us to have a lot of success early on, because I didn't have a job, I didn't have money, I didn't have income, right? Traditionally, banks require that. And so I was really good at being able to position a company, be able to position who we were, what we're doing, where we're at, the deals that we're doing really well to banks, to get them to want to essentially lend us their money, right? So that we can refinance out, take that money, the limited money that we have, the limited investors, limited partnerships that we had early on the front side, to really maximize a lot of that so that we could scale faster, and kind of maximize our dollars, if you will. I still to this day and always would say, somewhat secretly, because of the world we're in, and we're not really a real estate company. It's just a vehicle. We're really a finance company at the end of the day, because that's what we do, because we started with nothing and we had to leverage in order to get where we were. And that's what we did. I've never, in the $100 million plus portfolio, that we manage, a majority of all that is just my partner and I, so we've never put a single dollar into anything we've ever done. We've never used a single dollar of our own money, right? So, that to me is how we've been able to successfully scale, is not using our own capital because that limits you, but then being able to figure out how to get the capital that you need in order to scale it. So,
yeah,
those are probably the two fundamental things: is hire early, hire the right talent, and things that you're not good at, so you don't have to, and you can focus on your highest and best use, create happiness for yourselves and others, and know your friggin' numbers.